Good afternoon. How is everybody doing? Bit tired after lunch, graveyard slot, need some excitement, right? Well, I've got some excitement for you. We have a fantastic panel. And before I bring them up and introduce them and we get going, this topic is unlocking trillions. So it's a finance at scale conversation, and we've got some of the leading financiers in the UK, in the world, that are going to be gracing our presence on the stage here. But before we do that, can you show of hands if you've heard of Buckminster Fuller? Okay, quite a few people, Buckminster Fuller. I'd love to just give you a quote by Buckminster Fuller that struck me thanks to two amazing people, Jamie Arbib and Tony Sieber, the co-founders of Rethink X. And the quote goes as follows, that there's nothing about a caterpillar that tells you that it's going to become a butterfly. So hold that thought. It's a nature metaphor. It's a powerful metaphor. Why am I mentioning it on a finance unlocking trillion session? Hopefully we will find out. So please, can I have my panel come up? Rhian-Mari, Irina, Marisa Drew. Right, how are we doing? Panel?
Oh, good. Great,
good?
great.
Are you ready for this? Fantastic. So again, can you hear me? The sort of feedback, the echo is quite difficult to know whether you can hear me. Again, hands over there, you can hear me. Okay, great. So we're going to get into introducing the panel and finding out sort of a little bit more about them, something personal. I've asked each of our amazing panelists to share with the audience something about their backgrounds in the sense of, you know, the journey that they've been on. And so we're going to go down the order with you, Rhian-Mari, to start off with. So Rhian-Mari.
Well, thank you, Charles, and thank you for the opportunity to share a few personal stories. I'm now the CEO of the Green Finance Institute, but it was quite a circuitous route to get here. I was an environmentalist when I was growing up, ever since my dad explained to me about the greenhouse gas effect when I was a teenager. I wasn't aware, however, when I was pursuing my career in finance, that I could bring those two interests together until the Paris Agreement was signed. And I realized that actually, if all these governments would do what they said they were going to do to combat emissions under their nationally determined contributions, then that we'd see a huge change in industrial policy, and there'd be a massive opportunity for the banks to be the first movers and to actually hold their clients' hands through a revolution that we've never seen before. And so that got me figuring out how I could set up a green bank at Barclays, where I was at the time, how I could get involved in the TCFD, and then eventually how I could set up our own social enterprise, initially seed funded by government, now supported by generous philanthropists, and operate in 10 countries across the world with 80 colleagues. And so that was it was the moral compunction to do this, because I do think it's the moral challenge of our era, but also the realization that those of us who do know how to structure finance transactions have a huge role to play in actually helping channel capital towards where we need it to go. Okay,
and you fluent in Welsh, right?
I am, yes.
But you went to Trinity College Dublin.
Yes.
You live in England. So what are you exactly?
Well, I'm one of the two Welsh co-hosts for the Innovation Zero today. Baroness Bryony Worthington, very, very pleased to say that she's co-hosting. And if some of you caught the fireside this morning with Rachel Kite, our UK climate representative, some of you may not know that she's also flying the flag for us Welsh ladies too. So pleased to be on a diverse panel now.
You're still supporting Wales in rugby, are you?
Oh man, let's move on.
Okay, let's move on. Thank you very much. Irina, tell us a bit about, something about your earlier stage in life.
Thank you, Charles, and it's a pleasure to be here. Good afternoon, everyone. I hope you can hear me okay. So from the background perspective, I grew up surrounded by engineers. My whole family were in chemical engineering, in metallurgical engineering, in industrial, in electricity. So it was always this industrial discussions around the table that, early on I developed an industrial affinity. And I'll take you to a place that you will not expect, a steel plant. Imagine the blast furnace. It's hot, it's noisy, it's not exactly a place you will ever associate with the climate solution. And yet, that's exactly what got me fascinated. I mean, it's, the process of producing steel when iron ore gets converted into steel. I don't know if any of you witnessed, but I highly recommend visiting some of the steel making facilities because it's just incredibly, incredibly inspiring. So I think, to answer your question, Charles, I think for me it was just this fascination and around this foundational, fundamental industry, which is a backbone of the modern world, and how we produce it. That's, I think, something I wanted to share.
Thank you, Irina. And we got physics PhD here. We got an engineer turned finance guru at Harvard next. Then we have Marisa Drew. So Marisa, please tell us something about your early life.
So my early journey was one of someone who was completely confused about what I was going to do with my life. So I thought I wanted to be in politics. No, we won't even go there. I did a stint in politics, did a stint in diplomacy in the State Department, did a stint as an entrepreneur, and in all of those areas, I kept getting frustrated because things weren't moving at a pace that spoke to my sense of impatience. As one of my core fundamental, I guess, characteristics or traits is that I'm an impatient person, and with a short attention span. And then I finally landed on the financial markets and absolutely fell in love with the dynamism and the pace. And as an early banker of a very, very long time ago, when you start out in banking, you have sort of two choices. You can follow the very mature, established companies, or you can carve a route financing the young, innovative upstarts. And that's where I headed with my career and absolutely loved it. And so then when we come full circle, my circuitous route was through 35 years in investment banking and capital markets, but always in a very traditional sense. And then I was presented with the opportunity to get into sustainability, and that sense of urgency when you see what's happening around you and the need to bring capital, as you say, at scale. Now, back in the day, we were doing hundreds of billions, not trillions, but that was real money back then, and it was the power of capital to try to make really big change and deliver the kind of impact I think we're all here to discuss, is why I'm in it.
Brilliant. And I noticed Wharton MBA, guys, Wharton MBA, plus Credit Suisse a long time, and then Citigroup. I gather that at Credit Suisse you got into sustainability, right?
I did. It was 2017 when my CEO presented the opportunity, and I fought him on it because I wasn't really sure where that intersection of finance and capital would come together to make change. But the more I started to talk to great thought leaders and partners and friends in the industry, one of whom is sitting right here, we're all great friends. It's really fun that we've been on a similar journey together. Those people inspired me, and I saw what they were doing, and I figured if I could start partnering with them, we could make real change. Bring in the policymakers, bring in the diplomats, bring in the entrepreneurs, and bring in finance, and we got something cooking.
And I hear they need good politicians in America, so maybe that'll still happen. Uday, what about you and your earlier life?
Well, firstly, can you hear me? Hello?
Can you hear Uday?
Yeah, the acoustics here are not the opera
Hands up
house.
if you can hear Uday in the back there, please. Yep, okay, good.
So firstly, can I congratulate all of you? It's a wonderful group of people. For those who don't know these ladies, they are the most powerful, inspirational people. Yes. So great to be on this panel, not sure what I'm doing here. That having been said, the outer garb I wear is always a suit and a tie. I've spent my life for the last 33 years as a business person, an investor, a banker. I was at Morgan Stanley and all the rest of it. And I had to pretend I didn't care about which sector I was in. It was all risk-weighted returns, that was it. But we're human beings. For me, even though I was born in a suit, Indian business family, like many of you when you were children, I cared about animals. When I was 12, if you'd come to my room, you would have seen all the animal extinction books in the 70s and the geeky books with Latin names of animals. And it takes you a long time to steer your career towards what actually matters to you. And it took a while for me to get to Rio in '92. I was running Morgan Stanley in India at the time, and I heard about this great summit, and I found a friend of a friend who owned a gossip magazine, and I showed up with a press pass, and the lady spoke to me in Portuguese, and I said, I don't speak Portuguese. She said, you can't work for Manchete and not speak Portuguese. It's like working for Ola and not speaking Spanish. And I said, I'm the Indian correspondent. And she said, yeah, you're desperate. I said, yes, desperate. It's the beginning of the world process. So it's been a long journey, and we as human beings use every tool we can to move the needle. For me, like others here, one of the big tools was finance, and I've worked with sovereign wealth funds and pension funds for about 20 years. But that's what, and of course, meeting Al Gore was a key moment. And there are many of these, and then finally, these inspirational comrades in arms.
And do you remember what one of your favorite animals was at 12 years old, Uday?
Well, I still have it. It's a kangaroo with a baby kangaroo, and it's in my study, and I had it in prep school with me. So
Very
there.
good. And so then it led to Cambridge and Harvard Business School and joining the family business after Morgan Stanley and doing some great stuff. So right, we're going to get into basically how do we unlock trillions, and I want to come back to Rhian-Mari to talk about accelerating the transformation and the role of the Green Finance Institute in that.
Oh, well, thank you. Always a bit embarrassing to do a blatant advertorial for your own company, but when we were established 6 years ago, we took a very bold step, which was to say, rather than looking at the finance sector as a sector that needed to be greened, we wanted to view the finance sector as the facilitator for the transition of the real economy sectors where you see the emissions. And I use facilitator very advisedly because it's policy that is the enabler. But policy without finance doesn't get us to the outcomes that we need. And so what we actually focus on at the GFI is that we try and lure people out of the financial sector who've got transactional finance experience. They know how to mobilize capital. They know how to build capital stacks. And we actually focus on why, when there's been enough political signaling in certain sectors, are we not seeing the capital move? And so we triage the policymakers, the industry, and the finance to look at sectors like retrofitting homes, like road transport, like sustainable aviation fuel, like nature-based investing. We're now looking at carbon dioxide removals as well, and a few other areas as well, and saying, what are the incentives that are needed? What are the institutions that are needed? What are the policies that are needed? And what are the financial mechanisms that are needed that bring together philanthropic, public and private capital so that we can actually start testing, demonstrating and scaling what works? I do believe that to get to the billions, to get to the trillions, the financial markets work on precedent. So sadly, it's very difficult for us to go from 0 to 60. It's
What speed are we at right now?
Well, I think in certain sectors we're going pretty fast, right? We've seen what works. There was $2.1 trillion of investment last year in global green energy, clean energy, of which 818 of that came from China. But of that, the 1.9 trillion of that went into sectors where we've already got established business models, energy, power, transport. 154 billion of it went into some of the newer technologies that we need to see scale over the next 10 years if we're going to have an impact on emissions. And that's the area that really excites me. The first of a kind, the earlier of a kind, those technologies that are unfamiliar to mainstream finance, where we're going to need forward-thinking policy, we're going to need smart financial mechanisms, and we're going to need the financial institutions to really lean in and be creative.
Thank you, Rhian-Mari. You're probably wondering why I haven't mentioned Slido. That's because I'm going to take real questions from the audience, not Slido. So please don't put questions on Slido. We're going to engage you when we get to that. So Irina, you became a mergers and acquisitions finance whiz, and you're a deal maker. You joined ArcelorMittal. You've been looking out for targets. Can you tell us about, with a steel company, how do you look at that? How do you look at those targets?
Thank you, Charles. It's an excellent question. And indeed, with the background in M&A and investments across the last 20 years, and I've seen, the whole value chain, the whole steel and metal and mining value chain. And one thing that became obvious to me is if we are serious about net zero, we can't just focus on the shiny technologies, on electrical vehicles and carbon offsets and solar panels. All of those are important, but it's the industries like steel and cement and chemicals and shipping and aviation that accounts for close to 30%, so 1/3 of global CO2 emissions. This is the hard stuff, and this is the hard stuff that we need to tackle. And it's, they call them hard to abate. I would say it's really hard to ignore. And steel is, quite often I'm asked, if it's such a polluting industry, why are you continuing to produce steel? And then, why would we not just demolish the facilities and, focus on something else? Well, steel is foundational. It's in every electrical vehicle chassis, it's in every wind turbine, it's in every skyscraper, building, and bridges and infrastructure. So if you imagine the future in 5, 10, 15 years, pretty much anything you think about, be it data centers, again, be it, whichever infrastructure you think about, it's all going to be based on steel. So it's but the paradox, steel is not a problem. It's the system around it. It's the heavy infrastructure around it. It's how the energy system currently designed that results in close to 8% of CO2 emissions coming solely from steel. So you asked me the question. I think from my perspective, where I see my role is to connect the world of innovation, investing in some of the most disruptive necessary technologies with the world of the heavy industry, which is known for the low adoption of technology rates. So how do we connect it? How do we make sure that steel moves at a pace which is required to really produce it sustainably?
Thank you so much. And Marisa, I mean, when you left Credit Suisse, you had offers from just about every bank, but you chose Standard Chartered. So now tell us about Chief Sustainability Officer, Standard Chartered, and we're talking about system change here, thanks to Irina. I mean, where are we?
Yeah, so maybe you can join some of those dots, because the attraction for me to join Standard Chartered was very much the fact that Stan Chart's beating heart, as we say as a bank, is in the developing markets. So we're in 52 footprint market countries with a heavy emphasis on Asia, Africa, and the Middle East. And we range from high growth middle income countries all the way through to what we would call frontier markets. And in frontier markets, we might be talking about things like just getting basic access to built materials, light, heat, access, et cetera. And then on the other hand, we might be operating in a market that is scaling rapidly, and your lovely home country of India is extraordinary. You must get on a plane now to fly over a solar field. They are so big. So that kind of scale is taking hold. And the attraction for me was I could absolutely see that the power of the dollar in my markets makes a real difference, a massive difference. And in many of our markets, as I say, on the more frontier end of the markets, we've got a choice. We could either go with industries of the past, or we can go straight to the industries of the future, which are being created every day, which are the sustainable ones. And there's such an attraction for me to mobilize capital at scale to follow those solutions. And then bringing some of these threads together, Rhian-Mari talked about this, what gets us up in the morning is this innovation bit. And innovation can take many forms. It can be technological innovation, these breakthrough technologies that you're talking about, first of its kind in a hard to abate sector. We can also talk about innovation in business models, and you're talking a bit about process, right? The tiny little process component parts all added up can make a difference. And then there's financial innovation around structures and new models, which is why Uday's my good friend with his love of animals, because one of the first financial innovations I got to do in my old life was the first ever capital markets instrument for animal conservation called the Rhino Bond to help save an endangered species. So you look across the spectrum of what we get to do in our fields, and me particularly in our markets, and you can see why intellectually it's amazingly stimulating and fascinating and fun.
Thank you, Marisa. And I mean, Uday, you've been a real pioneer of green finance since the '92 Rio Summit. You've been on this mission for a very long time. You were trying to convince Morgan Stanley to do more of this, and then you left Morgan Stanley and went back to the family business in Delhi, and now you're based here in London. Is it not right that your family, your dad and your brother, were a little bit skeptical about you doing green finance?
I do not believe that anything I can do as a businessman or investor will ever have the impact that our philanthropy does. So if you don't mind, I'm going to be like one of these politicians and twist and give you an answer not to your question at all. Because the thing that matters, I think, for this discussion is the work that we as a philanthropy have done with sovereign wealth funds and pension funds for about 20 years now. And that journey is premised upon a very simple idea. I mean, everyone in this room knows that the Green Revolution is one of the great revolutions of our time. It's going to create massive opportunity, irrespective of a few, what was the word, blip, governments may say for a tiny bit of time in history. It is a great revolution. It's going to create great jobs. But what about the money for it? If you think about emerging countries, in the famous Stern-Songway report, they talk about 2.5 trillion, 1.4 domestically raised, a net gap of $1 trillion a year for the global south. The question is, how do we do that? When that's where all the great buildings are going up, the new coal-fired power stations, how do we do that? And so what struck us was that you have these huge pools of institutional investors who need long-term yield, and you have all these infrastructure projects that need that kind of capital. So logically, they should go together. Why don't they? Why is there a tiny little bit of flow that is now increasing, but has to get much, much larger? So we started to work with groups of pension funds and sovereign wealth funds, 10, 20, 30 trillion, $40 trillion groups together to get them to collaborate, to look at these opportunities. And that was partially successful, but what came to me late, which came to the others here early, was the understanding that it's all about risk and return. And we've got to get the bridge to work. I remember back in COP in Copenhagen, they just had a new bridge between Sweden and Denmark. And the analogy we used was, imagine you built 90% of the bridge and it's beautiful, the 10% doesn't exist. Well, the cars are not going to drive. So therefore, how do we make that work? And there's been a big theme that many people here have been involved in the last 2-3 years of blended finance, of how could fiscal capacity or clever structuring or philanthropy create that bridge. We started to think beyond that because we realized that there's only a very small amount of northern fiscal capacity. So we started to think fundamentally, how can you reduce risk? And we realized that it needed, as everyone here has said, a systematic approach. And so working with sovereign wealth funds and pension funds, we did two things that are of relevance. One, created India's power risk architecture, and then separately started to focus on the geeky area of electric buses, which I know more about than I ever thought. You know, I'm not a great bus person, but I am now. So the bottom line being that in commercial markets, capitalism self-organizes over a 10, 15, 20-year period. People get together and lower risk as they experiment. We don't have the time. We've got 3 years. It's more like D-Day. So therefore, what we've been doing is bringing everyone together. So bus operators, bus OEMs, local regulators, city governments, people who provide the electrons, and saying, now, we're not going to let you go to the bathroom until you've identified the risks, and that we're not going to let you go to the bathroom until you come up with solutions and create a process. And that's what we call de-risking. And if we have time, I'd love to describe the 3x5 process.
It's a real
May
collaboration.
I jump in? Because you want to talk about collaboration. I landed at Standard Chartered, and probably not more than 2 weeks into my new role, I get the phone call from the friend who says, I've got this little project in India. Can we have a chat about a bit of financing? And this is where you do need very much a collaborative approach, but also thinking outside the box. Because what up until recently have we seen in the West in terms of the electrification of the transport industry? We have different car manufacturers all making different cars with different batteries, which all need to do something which has a cost to the system, which is plug in somewhere. And none of these are swappable. They're all made independently. And then what do we have? Governments spending hundreds of billions of dollars putting in charging infrastructure, which is a slow-going thing. In India, what have they done? Something completely different. Get together with the OEM, the manufacturers, and think of these buses, and then ultimately it can be cars.
And the tuk-tuks.
Just a shell. And what do we all do with traditional cars? We go to the petrol station. It's on our normal route. That's what we do. But instead of filling your vehicle with petrol, you go swap out one battery, 2 seconds. You put the new one in. Logically, think about that. You already have the infrastructure of the petrol station built. if you can get everyone to agree that these batteries should be swappable, the cost of production of the cars or trucks or buses goes right down.
And one of Uday's businesses that's doing the swappable batteries, not just for the buses, but for the tuk-tuks, Sun Mobility, based in Bangalore.
And
Zero
Standard Chartered
downtime.
very kindly.
Standard Chartered, that's great collaboration. But let's go back to the system change point. And you remember I talked about a quote? Anyone remember who the author of the quote that I mentioned was? Hands up. Exactly, Buckminster Fuller. Nothing about a caterpillar that tells you it's going to be a butterfly. I come back to this idea of a new paradigm, because are we incentivizing the right sort of unlocking at the moment in what we call the stellar language of Jamie Arbib and Tony Seba, the extractive paradigm? Growth at all costs, and it's all about extractive, and it's all about competition. Either it's mine or it's yours, and we fight over it. In another paradigm, if we incentivize collaboration, and we have earlier we heard from Adair Turner and Greg Jackson and others on the decentralization of clean energy systems, the creation of the Internet of Energy, the clean Internet of Energy, which will give us superabundance of energy and opportunities. How do we change the game and move to a new paradigm? Haven't we been stuck in this incrementalism for a bit long? You talk about asset owners. I mean, are they really on the miles per hour, Rhian-Mari? Are these asset owners really coming to the party? Rhian-Mari.
As a financier, I find it quite difficult when we start talking about system change in such a sort of rhetorical and overarching way. There are a lot of very smart people that work in finance, but we've never figured out a way of moving capital other than between two counterparties. When you actually want finance to move, you need a term sheet. You need somebody who's a bit able to say, here's my future cash flows, here's my revenues, here's my asset. And one of the biggest challenges we have, I think, is how do we ladder up from what is effectively project level, infrastructure level financing through to the broader vision of how do you actually ladder up into that system. So one of the things that make my heart sink is when I walk into a room and someone says, I want to talk to you about decarbonizing a city. And I'm like, I'm a financier. I can't finance a city. I can finance the component parts in that city, the buildings, the water, the electrification of transport. But in the same way that engineers think, you look at that overall picture and you find, how do I reduce that into the bilateral transactions where I can actually get my financing colleagues involved? And that brings me on to a point that you were making, Marisa, about how exciting it is to see innovation across so many different aspects. Yes, we need huge amounts of collaboration. And you mentioned that, there's innovation in finance, there's innovation in technology, there's an innovation in business models. There's also an innovation in policy making. Forward-thinking policy that actually helps us ladder up from the way financiers think to the way systems need to operate is absolutely critical.
And also changing, the rules of accounting. So we talked about a city. A city's balance sheet, a tree in a city is not an asset, right?
No.
It's a liability in a city's balance sheet. So how do we change the rules, the accounting rules?
Well, that is quietly happening. We are seeing that quiet accounting revolution happen when it comes to nature. Some of you may have seen the TNFD, Task Force on Nature-Related Financial Disclosures, signed a memorandum of understanding with the IFRS Foundation just last month, which basically means that the International Standards on Sustainability Board is going to actually build on the work that the task force has done, which is looking at the impact on nature and the dependencies on nature. And that is actually, there's 36 countries around the world that follow the ISSB standards. That's 57% of GDP. So this is actually starting to happen, and shout out to the team at TNFD who sit on our platform, but shout out to the team at the TNFD for what is a fantastic step forward in their journey.
Very good. Lots more from the panel, but we're going to involve you. So who has the microphones? That's one microphone, two microphones. Questions in threes, please. And please state your name. Don't give us a statement, please. Just a short question. Name first, question. Is it to an individual? Is it to the whole panel? Take them in threes. So that gentleman there first, please.
Hi, Charles. Thank you for making the analogy about the stellar. I'm a huge fan of the work that Tony and Siba are doing. I'm actually building a company around the whole idea of superabundance clean energy in AI. Quick question to you. In the internet early days, to the whole panel, because you guys smart people, I just want to use a bit of your imagination and pose a question for the next 10 years. In the early days of the internet, everyone focused on the hardware, but the ones who truly capture the trillion-dollar market are the application layer, the Google, the Amazons, and Metas of this world. What application layers do you see in the clean energy that will be the trillion-dollar industries of the future? Not the hardware, but the digital, the infrastructure level. Thank you.
Thank you. Can you pass the microphone there? And we need a woman, please. Who's the first woman to ask a question? Come on. We need in three. So if you would like to ask a question, please put up your hands.
Andrew Ross from Global Garden. It's for Rhian-Mari, if I may. How is the GFI going to work with the Nature Restoration Fund that's being set up by Natural England under the Planning and Infrastructure Bill?
Okay, is there a third question, or are you still thinking about it? Should I take the two? Okay, let's take the two. So, Rhian-Mari, do you want to take the second question first?
Sure. Good to see you, Andrew. How are you? We've been working very closely with DEFRA. We work very closely with Tony Juniper. I think you know my colleague Helen Avery, who heads up our nature finance work and is arguably the leading nature finance expert in the country. And therefore, we will be working on, we've got two big programs that we're doing at the moment, and we'd love the nature facility to play a role in that. One of them is called Revenues for Nature, where we've partnered with two different UN bodies to look at where nature markets are actually working. So we have an example in the UK of biodiversity net gain. I won't go into all the details now. It's imperfect, but it is an example, and it is starting to work as a compliance market. There are other fantastic examples in Colombia, in the US, in Australia. And we're creating a community, a global community of practice to say where we see nature markets actually moving capital, so things that are working, how do we replicate them? And we know from experience it isn't sufficient just to put the case study out there and hope people will run with it. You've actually got to do the hand-holding, do the collaboration, bring the people into the tent, and help them overcome some of the barriers so that we can replicate it. So really exciting times for nature finance, both in the UK and globally. Happy to pick up with you on that.
Thank you. And on Nadal's question of superabundance, Marisa?
Well, first of all, I love that question, because when I was moving into sustainability and my chief executive was presenting the idea of coming into this field to me, and I was a bit resistant because I wasn't sure if this was strategic or a marketing thing. He said, would you rather think about a tech company, would you rather be in the hardware division or the software division? And that was the analog for, you know, where the world was headed and where the real business was going to be. So that led me to sustainability. So it makes me think about this a lot, the application layer. I think in the energy space, one of the obvious things is that our grids today are quite inefficient. The electricity that gets produced isn't necessarily getting to the right place at the right time at the right cost when it's needed, and it puts unnecessary stress on the system. And often then we equate that to not having enough. But actually there's enough, it's just not managed properly. And I think there is an unlock here with AI that is going to create a much, much better balance and way of using electricity that's going to be so much smarter than it is today. And we're going to need it, because the expectation is with the mass adoption of AI, and we haven't even begun to think about quantum computing. We've got multipliers effects that are just almost hard to comprehend. We're going to have much smarter systems. So that's just one very small application about how AI is going to work and tech is going to work to get that energy where it's needed.
Thank you, Marina. I'm going to bring in Irina in a second. Thank you, Marisa. I'm going to bring in Irina in a second. But Uday, you've just hosted a 2-day summit on AI for climate. To Nadal's point about decentralized energy hubs based on clean energy systems with robotics and AI, I mean, do you think that's a good place for data centers to gravitate towards, for example?
Well, I'm going to broaden that question and link it to Marisa's. So I personally believe we are moving towards a universal energy matrix. That is to say, instead of a single point of generation distribution, it's self-evident that we're moving to a place where everyone's making energy and trading energy, selling it to the grid, putting in the car, the vehicle to grid. Oh my God, what a nightmare for the utilities. Now, in that world where everything is digitized and linked to data, then, of course, and energy and electrons are flowing in all directions, it is almost inconceivable that that world will exist without AI to manage and optimize these systems. Not only within the generation or the grid or the demand management pieces, but into the ecosystem of transportation or the built environment. All of it gets linked up. So system optimization for sure, but I'd also add supply chain optimization. We went from MRP to ERP, just in time. It's a whole new world of what AI and digitization is going to do for the efficiency of value chains, including resilience and national security as parameters and all the rest of it. And the third thing is innovation. In the summit we had, so many wonderful examples of innovation in engineering, innovation in material science, all happening under the impact of AI. So my view is very simple. You got King Kong in the room, get it to fight Godzilla. And this is the biggest gorilla in the room at the moment.
And Irina, I mean, when you're having long-term horizons, like in a steel company with a quest for sort of low-carbon steel opportunities, I mean, is this difficult? Because decentralization of energy, does that pose a massive risk?
I think excellent question, thank you. If you think about our industry, success, and we all often speak about speed and acceleration, success is not about proving something in a lab. Success is really around perseverance and showing that you can survive this 10+ year cycle.
Value of death and all that.
We spoke and we spoke about software and hardware, and I had this discussion with one of the venture capital funds, and they were saying, oh gosh, for us, we've been dealing always with this, technologies and software, and if you find something disruptive, it's like this, and you can roll it out almost immediately. In our industry, if you find something disruptive, it's like 10 years, 10 billion down the road before you get them. So it's a completely different ballgame. But of course, addressing your point around application, it's the whole value chain, it's the whole ecosystem which is also reliant across the value chain on all of the applications. So it's also, grid and energy storage. So we need all of that, but we also need to have these building blocks to complete this, puzzle with all of those pieces.
Thank you, Irina. So surely there's, okay, lovely, thank you. One question there. Any other hands? Okay, Keegan. Okay, 1, 2, 3. So that lady in the middle there, please. And think about that caterpillar to butterfly. I mean, they talk about, are we just putting wings on a caterpillar right now with, for example, the energy system? How do we have a true butterfly? Is it a revolution rather than just evolution? Right, over to you.
Fantastic. So I'm Doreen.
Revolution.
And I run Fresco Clean Tech Solutions, which focuses on financing the nuclear industry in addition to other clean technology. So my question to the panel is, what are your thoughts on incorporating small, advanced, modular reactors into the much needed base load, in particular recognizing AI infrastructure's advancement and of course the energy security that we
Thank
need.
you so much. Keegan. In the middle with the red shirt. No, in the middle, further forward. Yes, that man. Fellow South African.
That's right.
Good guy.
Thank you very much. Hi, yes. Keegan Lovely. A question for, well, prompted by Rhian-Mari and Uday, but for the whole panel. We spoke about bilateral finance, and we spoke about King Kong. How do we we spoke about bilateral finance and King Kong in the room. How do we democratize and get more of a community engagement, particularly for underrepresented investors and underrepresented investees and founders? And I'm thinking particularly women-led founder groups. How do we help those people seed and get to IPO?
Lovely. And behind you, yeah, there was a person right behind. Yes, that lady with, yes, exactly.
Hi, my name is Eleanor, and I'm here with CNF, a sustainable aviation fuels developer. And my question has been inspired by the different types of investment that people have been talking about, and it's for the whole panel. And it's how do you judge what has the best non-financial return? So how do you compare a nature-based solution with decarbonizing steel, with decarbonizing the aviation industry when you're making decisions on where to deploy capital?
Okay, that's brilliant. So you can choose which of those questions you'd like to answer. Irina, why don't you go first?
I'll happy to start with the first one on nuclear energy. Industrial facility needs energy 24/7. We can't just rely on the electricity when the sun shines and the wind blows. So for that reason, one of the investments we made through the fund is actually in a company called TerraPower, which is advanced nuclear. So to answer your question, I think nuclear has to be part of the mix, and that's the reason one of the investments we made in this space is
and that's called the X Carbon Innovation Fund. Notice the X. Rethink X are the people behind Stellar as well. There's a lot of these X's.
Well,
what is this X all about? Right, Marisa, which question?
Well, I was going to take nuclear as well, but just as a financier, because what's interesting about this space is when I first came into sustainability, the ESG rating services had nuclear on any form of nuclear on their red list. It was a no-go. And I think there is now recognition, and even in the most strident anti-nuclear countries are now open to the idea that nuclear done well with the right guardrails is truly green energy. And to Irina's point, we need that baseload energy. So whether it's SMRs or XSMRs, which are the little 1 megawatt, that are single use cases, I think we need to be energy agnostic as to the solutions as we try to power up the whole world to meet this kind of energy demand.
Great, so we had a question about democratization and then a question about evaluating financial and non-financial with different technologies like sustainable aviation fuel. Which one would you like?
I'd like to do both. I'll be very
quick.
quick.
You can do both.
Thank you so much for raising the point about communities. This is all about channeling global capital to local solutions. I think that's becoming more and more apparent. I don't know the answer to your specific question in maybe some of the jurisdictions that you're more familiar with, but I will give you an example of something that I found very, very heartwarming here in the UK, which is the local climate bonds initiative that we've launched with our partners at Abundance. And that enables local authorities to issue bonds for their local communities where people can subscribe from £5 upwards. We've done 12 of them. We've raised about £14 million so far. We could scale the market a lot. The opportunities for scale are there, but we're working on that. But the thing I wanted to say is we did a bit of demographic polling to see who was actually buying these bonds, assuming that they would be people in a certain social demographic, and they really weren't. It was the whole way, and it just shows how there is this real grassroots, just this passion to support local communities and support climate, because the money goes obviously towards climate outcomes. And we found it right across the piece. So I found that really, really heartening given some of the narratives that we're having to counter at the moment. Your question on which opportunities should we go after? Because we're looking at an absolutely profound change in the entire global economy, I do think that there is a temptation for us to go, it's everything all at once. And that is where I go again to the point about the importance of industrial strategy. Maybe not picking winners, but certainly picking pathways that we can get behind so that investors have that confidence that we have in the UK and in other countries a long-term commitment to actually leading on certain sectors where we have a competitive advantage. That work hasn't been done and it needs to be done.
Thank you. And Uday, which question of those two?
Well, I will just like to say that I'm going to cheat again. I've been cheating throughout this panel. So on nuclear, also think about all the data center stuff, which needs consistent energy. On the question of evaluating which of these parameters to go after, my personal view is connect to your deepest passion, because all the Rockstrom frontiers need all of us to be fierce warriors. So the point is, I'm sorry I'm answering that not in a very expert way, I'm just saying, for God's sake, we need everyone's leadership on what they most care about. So my real answer will be on the last one. Equity, in a way, is democratized in the public equity markets. You can buy stocks. Bonds, kind of democratized, you can buy bonds. It's in the private markets that this question most arises. How do we get those early stage private equity? And I'm wondering, it's really interesting dialogue to have, to what extent AI and data can help us evaluate this in a whole new paradigm of democratizing private investment. Now, there are other things one can do that could be helpful. I set up a company called Just Giving. It was about community giving in this country. And I do think one can tap into those community models. And one could do it for for-profit models like this, I would imagine. I'm not an expert. But look, we've been talking about mitigation throughout this panel. Our foundation just had 2 summits on adaptation. The time has come where we have to address climate adaptation, where this kind of community involvement will be even more important than it is in the mitigation domain.
And we're out of time, but thank you so much. Before you join me in applauding our great panel, the X, just think about that X again, right? So bringing the old to the end of its useful life is one way I think about it. So, you know, what is coming down at the moment is the use of fossil fuels, we would think, right? Yes. Is that terminal? And is that the one side of the X? We're going to stop using fossil fuels. Like in the early 1800s, we brought human slavery down, abolished it. They fought a nasty war in America over it, but eventually it was outlawed and we moved beyond human slavery. Now, on the X front, going up, in those days it was the steam engine, and it was the Industrial Revolution, and it was fossil fuels. Ironically, now, 200 plus years later, what is that? And I'm sure that is the clean energy systems with robotics and AI underpinning a new paradigm which Jamie and Tony, who you've heard about today, call stellar. So let's talk about that some other time, but that's the butterfly that I alluded to in the beginning. Please join me in thanking the panel.